Hi, welcome back to today's morning report on Thursday, the 30th of July, with me, Rich Perry, market analyst at Handtech Markets. Moving on to Eurodollar, and we've seen this chart again rally and roll over. We've seen this sequence of lower highs continuing. Look at this 144-day moving average, this black line here on this chart. Since June, you had a very small amount of sort of breaching there, but again, it's nothing too significant. But since then, it's pretty much hit it to the pip and come off again. So every time the euro comes back towards this moving average, it rolls over and falls away. That would suggest obviously we're in a negative frame of mind for trading. Back below 110.50, my pivot level that I continue to talk about, that again puts you in a negative mindset. Momentum indicators have rolled over as well, so stochastics crossing back lower. So I think this is sort of turning back lower again, and the fact that on the intraday chart we are now we've broken that uptrend. We're seeing the moving averages rolling over. The momentum indicators on the hourly are also in much more negative configuration, certainly corrective anyway. And I think we're going to be putting pressure back on this initial support at 109.24 and ultimately possibly back towards 108.70, which is the key reaction low from the 22nd. So it certainly looks like this bull sort of recovery has rolled over. Now, I did just talk about euro yen rolling over as well, but I see that dollar yen is, sorry, not dollar yen, euro dollar is far more corrective than euro yen is, and I would see that dollar yen is going to be pushing towards the downside on that. I see the momentum far more bearish on this chart. And I think that the momentum is building to the downside once again there, and in the fact that you've got this sequence of lower highs, I think you're going to see pressure building once more to the downside. Momentum indicators are rolling over as well. So there are sort of quite a lot of aspects of this chart which suggest, I think, that we're sort of returning to a more bearish outlook, driven by the Fed potentially. I mean, there was a slightly hawkish lean in the statement, nothing too significant, but still a slight move, which I think will drive a stronger dollar and drag euro dollar lower. So I wish you good luck in your trading today on euro dollar, and I will speak to you later. Don't forget the advanced GDP data, which will have a big impact, I think, on volatility.